Hey guys, welcome to this weekly Bitcoin analysis. My name is Mark Fu, and today is Monday the 20th of June. If you find this analysis useful, please make sure to give the video a like and subscribe to the channel. It really helps us grow. Now, I'm on the weekly Bitcoin chart here, and we can see we've obviously had a bit of a capitulation, something that we've been predicting. You can see that I actually highlighted previously some areas here. I'm just going to zoom in a bit closer. And you can see I highlighted the bottom of this small bodied candle here and the bottom of this small bodied candle here as areas that would provide some support. If we jump all the way down onto the 1 hour time frame quickly, you can actually see that in this area has been very supportive. Specifically this first candle body that I highlighted, we can see that we've danced around this area, had a perfect test here, failed, we've come back above it, been rejected there, and then come above it, come back, another perfect test there. So that's quite a strong area to pay attention to. And we can also see my target for the bear flag I highlighted last week of 17,517 I put on here. We almost touched that perfectly. So if you like accuracy, give the video a like and subscribe to the channel. Let's just jump back up to the weekly. So now I'm going to draw in this weekly bear flag again. Let's take the magnet tool off there. I'm going to draw this in again, and we're going to draw the target again. Originally we drew two targets, one in log view and one in standard view, and I said that we would go with the log view target for the meantime because it was the earlier target, but we've dropped below that target now, so I think it makes sense to have a look at the would-be target in standard view, which would be around about here. We want to get out a little bit earlier than other traders, which is why we don't go to the very end of that measured move. And we can see we've got a target there of about 13,300. So now that I've got that on the chart, I'm just going to delete that and get that out of the way as well. So that's going to be my next target, 13,300. Let's jump down onto the daily now. So on the daily, you'll remember from the last update that I drew in that bear flag and we drew the target of 17,500 and $17, and we were almost perfect with coming down with almost a perfect touch on that target. And now we wait to see what happens next. We're actually getting a bit of a bounce that's probably better viewed on the lower time frames here. So we've come down and we had a little bit of bullish divergence there, which got us a bounce that was quickly rejected. In my private community, we were looking at this as a double top here, so a double top here and versus a inverse head and shoulders. But I said to the guys at the time that in the context of the wider things that's happening in the market, we've got two opposing analyses here, one saying further downside and one saying potential reversal, but we'd always have to lean on the one that says further downside just because we're in such bearish conditions and we're in a downtrend. The bias should be always for that trend to continue. Now I'll just get rid of that stuff, and now we are getting a bit of a bounce, and we should expect a bounce off of this target area. And also because we're at the previous bull market's all-time high, there's always going to be support coming in there or thereabouts. But now we need to ask what happens next. So let's just jump back up. Maybe the 4 hour time frame might be a better place to view this. And we've got this area here. It didn't provide a lot of resistance. Just have a look for somewhere that we might be rallying to now. There's really not a lot in here. So I would say it's most likely that if we do get a rally here, that we might just come up to test the weekly 200 moving average there. So that would look something like this, and then further downside. And I would be targeting this 13,300 for profit taking. And when I say that that's a target, I don't mean that that is where I think the bottom of the market is. It's just a target for any trades that I'd be putting on. The truth is that we don't know where the bottom of this market is. It's going to be decided by monetary policy. And right now, the Fed's unwinding its balance sheet. The goal is to remove $1 trillion of money from the money supply. And what that's going to do to markets is most likely going to be devastating. The S&P 500 is likely to get crushed. I mean, it's been crushed already, but that's likely to continue. Any rallies are for selling, in my opinion. Just like in a bull market where dips are to be bought, in a bear market, rallies are to be sold, and this is most definitely a bear market. Everything on the chart says bearish. Everything in the wider context of what's going on with the Fed raising interest rates and unwinding its balance sheet is bearish. I'm not buying this dip, although my dollar cost averaging continues. I think that you should always be dollar cost averaging on a downturn like this. However, my dollar cost averaging is fairly slow. I am waiting for monetary policy to change, or for at least there to be an indication that monetary policy is going to change. But with inflation still going up, I can't see that happening in the immediate future, although I suspect that the Democrats are going to have to try and do something to get the stock market to go up before the midterm elections in November. So until then, we continue to be bearish and wait to see if there's any news on the horizon. Cheers, guys. I'll see you next week.